Hello, friends. Welcome back to the weekly crypto recap. Let's start with the markets. And if we look at crypto bubbles, it's a mixed bag. We see some of the newer tokens like Manta here showing a massive 62% gains. Tau is up. It was down when it is one of the tokens that gave a massive rise or upside, especially in the crypto AI domain. Then we have Ronin, and then a couple of other chains here that have shown. So it's kind of cyclical because I mean when Bitcoin goes down, it brings down Ethereum, with brings down a couple of coins with it, and the other coins go up. And then when the Ethereum and these coins go up, the ones that were up, then they come back. Of course, you can't really predict which ones are in this batch and which ones are in this batch, but it's kind of cyclical, as you might have guessed or imagined by now. So let's take a look at how the inflows have been in the market. If you look at the last week coin share report, which came out on Monday, uh, talking about the week prior to this week, because of the ETF and the whole Grayscale Bitcoin Trust story, and we talked about it in the previous weekly crypto recap of the total inflows were in negative, which means there were no inflows. Essentially, they were outflows. So, and it's clearly visible from this little bump that you see in the negative. So this is the week prior to this week. We saw the minor outflows were around 21 million. But in this week, I feel the things are different. And let's take a look at why that is the case. So let's start with this chart first from James. If you look at this week, you see that, of course, the big red is the GBDC. Uh, it is still selling. People are still selling and moving into the other ETFs. But this week, there is a net positive of around 727 million US dollars. So that is a good sign. So I'm hoping if this trend mm, so I mean, by next week when the coin share report comes, you will see a little positive bump in the inflows. So this is good news. And is there anything else? So yes, so I mean, if let's take a look at some of the good news from James's tweet here. The BlackRock has over 2 billion in AUM already in 10 days. And it has around 50,000 Bitcoin tokens now. Fidelity is also growing faster. If you remove Grayscale, on an average, $500 million per day are rolling into the Bitcoin ETFs. Okay. So, yes. So if you remove Grayscale, a lot of this volume is coming into the ETF. But one can argue that this volume is actually moving from Grayscale into Bitcoin, right? So if there is no Grayscale, hypothetically, would we actually see this much traffic? So that is a good question to answer. I feel it will not be this much, but then there are other factors that will come into play because as we discussed in the last meeting, there are other countries that are looking into starting their own spot ETFs, Hong Kong being one of those. So yes, so we could see more spot ETFs churn up, pop up in the world, and that would probably compensate for GBDC, but GBDC is just too much. Yeah, it's going to take a while for the negative impact to subside or to be eaten away or absorbed by the other ETFs. But as we just saw, there is a positive week inflow this week, so I hope it continues. And this was demonstrated in the price of Bitcoin, which actually went up. It came down to 39,000 or something, I believe. Let me see if I can find Bitcoin here. Yeah, so it came down to around 38,000, and then slowly it's been rebounding, and then now it's already back into the same territory that it was before. So good news overall. Let's move on to the next news story of the week. Okay, crypto.com came out with this report called the crypto market sizing, and in which they have done an extensive research and came out with the analysis that last year in 2023, global cryptocurrency owners increased by 34%, rising from 432 to 580 million. Um, in which Bitcoin grew by 33%. Oops, sorry. And Ethereum grew by 39%. Based on their analysis, what they found were the primary reason behind this was for BTC, it was the catalyst of the ETF and also the introduction of the Bitcoin ordinals, which is quite surprising. And for Ethereum, it was obviously the liquid staking narrative, and the anticipation of the Shanghai upgrade, not the Shanghai, sorry, the anticipation of the new upgrade, also, if I may add that here. So I'm just going to scroll down a little bit, and they have some charts here. So yes, as said before, you see the cumulative numbers here from Jan of last year. We see from 432 to 580, as we've already seen, a 34% rise. There have been instances where the rise has not been much, like for instance, May, June, July. It's only a little bit, right? And yeah, so here we see the percentage growth. So May, June, July, we see that we don't really have a lot. It's in fractions of percentage. But overall, obviously, cumulative numbers, as you can see, the numbers are growing overall. And I think the narratives are very powerful, as you may have imagined, for Bitcoin, especially the ETF. And let me just add, if Ethereum's spot ETF also gets approved this year, then you can imagine how this number is going to look for the year of 2024. So overall, great news for the crypto ecosystem. And we look at Bitcoin and Ethereum as the leaders of the pack to kind of provide the guidance for the entire crypto ecosystem. And so far, things are looking positive. Let's move on to the next news. Right. So this one is an interesting new addition to the whole liquid re-staking narrative. For those who are not familiar with this narrative, uh, you know about liquid staking, right? So if you don't have 32 ETH to stake on the Ethereum beacon chain, you can use whatever ETH you have and deposit it into something called a liquid staking protocol, like Rocket Pool or Lido. And in return, what you get is a share of the returns that the validators get in the form of APY. And yes, and you get something called as a liquid staking token, which is a liquid token, meaning its value is almost the same as one Ethereum. So it's not like your Ethereum is actually logged in the beacon chain. You can still use like a mirror image of that token to do any DeFi stuff for purchasing or selling, whatever you like. So that is liquid staking. Liquid restaking is basically taking it another level, where you have the staked tokens and then you restake them, and then add up additional uh, APR on top of whatever you're getting for liquid staking. So in that liquid restaking part, we have another new player called Magpie. And now there are already a lot of players in this. Let me pull up the current portfolio or the ecosystem. Now there are much. So if you look at CoinGecko, they have a category called liquid restaking tokens. Now there are more projects than this, but the top ones are EtherFi, Kelp, Renzo, right? And now you will have Magpie as another one of those in this list, hopefully down the line. So it's already packed, and there's a lot of competition. So how Magpie is actually differentiating itself from these other liquid restaking service providers is that it has come up with an idea of something called as an isolated or a isolated liquid restaking. So what happens is when you put your ETH or liquid stake token on EigenLayer, a bunch of different ETH stake tokens like Lido, Rocket Pool, Frax, they will come together into one bucket and that will be restaked, right? So what Magpie is saying that, what happens in that is that you are sharing because you are being bundled together with other liquid staking protocols. You end up uh, 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 you know getting the exposed to the risks to the other staked protocols. So for instance, if you are Lido stake protocol and there is something happened on the Rocket Pool stake liquid staking token, and if that starts to see a problem, it might impact your liquid restaking pool because it's a combination of all of these tokens together. So what they've done is that instead of clubbing all the bunch of different stake tokens together, they have created isolated restaking pools for every staked token, right? So here is the chart. So if you have staked ETH like Lido, you will be bundled only with other staked ST ETH token providers, and you will get a separate liquid staking restaking token called MST ETH for that, and similarly for Rocket Pool and others. So these are individual pools. They are not clubbed together, or they're not they're isolated, hence the word. So their idea is that liquid LST holders have the opportunity to maximize their rewards by converting their assets into isolated liquid restaked, right? So if you're a Lido fan and you don't want to be clubbed together, say with Rocket Pool, you can just stick to Lido restaking and be happy with it. Similarly with others, right? So it's perfect for those people. With ILR ETH, they can effectively add an additional layer of income. Obviously, we know that. Each isolated ETH is backed by one specific asset, as we have seen, right? So this is something interesting. Obviously, it's a new project, so a word of caution. They have yet to get their protocols audited, and they're going to be engaging in a thorough and rigorous review, according to them. So that is a smart contract is a big risk, as you probably know by now, in the world of crypto. So although they have a interesting proposition, something that I would like to try as well, but I am obviously always cautious about new project, especially from a smart contract risk perspective, right? So that's my take on it. But it's an interesting new project in addition to the whole LRT narrative. Okay, let's move on to the first Solana news of the day. Now, this one's big news. Now, what happens is, okay, let me just read this out first, and then I think we'll watch this video for a little bit to kind of understand the whole story. The future of tokenization is now introducing token extensions ready to use advanced token functionality on Solana. Token extensions empower developers to rapidly build customized token experiences, etc., to meet business compliance needs. So just to give you a little background, now most of the projects like Solana, Ethereum are public blockchains, right? At the moment, most of the applications deployed are open systems, open source, crypto native projects. But if you want true adoption, we would need merging with the Web2 customer base or the economy. The biggest issue for Web2 companies is regulation and the fact that crypto is seen as an unregulated ecosystem. That is it's keeping Web2 companies from engaging with public blockchains. Now, they obviously are they are experimenting with private blockchains, but with public blockchains, they are not because of these particular issues: security, data regulations, etc. So what Solana is doing here is they're providing customizability to developers of those Web2 companies or even Web3 companies for that matter. So for instance, if I'm a wallet service provider, I have a wallet on Solana and I want to attract Web2 customers, right? That means that I have to comply by the rules of the land. I might have to do KYC. I might have to put certain restrictions, certain checks and balances in place that are meant according to the regulations, and also give users the flexibility of doing things that they're more or less accustomed to in the Web 2 world. Now, that is what these token extensions do, right? So I hope that helped a little bit. Let's take a look at let's listen to this video a little bit, and I'm sure that will make things clear.
Token extension.
Okay.
Which reduce the amount of work you're engineering.
Okay, now I'm going to skip to this part and I'm going to go to the next speaker because I think he talks about the specific examples. So I feel that is more relevant and will make things much easier and clearer.
And provide capabilities that weren't previously possible.
Token extensions are designed in a way that the basic capabilities of any SPL token remain the same, retaining full composability with dApps, wallets, programs, while still allowing customization for advanced use cases. While each token extension offers unique functionality, today we want to focus on 5 of the token extensions we find most impactful for businesses building on Solana. Let's talk about transfer hooks. Transfer hooks are a powerful new extension that give token issuers greater ability to dictate how tokens and users interact. Here's how it works. Token issuers can designate a specific program that is invoked every single time a token is transferred. The program, called by the transfer hook extension, can determine whether the transfer is allowed based on a whole host of criteria from on-chain sources. This flexible design empowers developers to build complex token interactions. And because the transfers happen at the token program level, it can't be bypassed. Next, confidential transfers. All information sent over a blockchain is by default public. However, being able to see specific details of those transactions can expose sensitive information for businesses. The confidential transfer framework is a new approach to privacy, which retains the compliance needs of businesses. These are non-anonymous, non-private transfers that publicly share the source, destination, and token type, but use zero-knowledge proofs to encrypt the amounts of the transfer. Token issuers also have the ability to appoint an auditor, which can decrypt the amounts transferred. Suddenly, previously sensitive actions like merchant settlement flows and payroll are now possible on blockchain, because one can make these kinds of payments without the amounts being public information. The permanent delegate token extension is a powerful extension designed to give the token issuer absolute authority over tokens that they issue. The extension is intended for tokens that require revocation ability, such as...
Okay, so I hope you got a little bit of a taste of what token extensions are meant to do. They are meant to help businesses, especially Web 2 businesses, and even Web 3 businesses to kind of attract Web 2 customer base and become more relevant and attractive to the Web 2 economy, right? So I think this is a big move by Solana. And it'll be interesting to see how this actually plays out in the future. So great news from the Solana ecosystem. And of course, I'll post this in the description. So if you were interested, you can go ahead and watch the entire video later. All right, the next news is again from Solana. So recently, there was a new token airdrop called Ven. Just like we've seen in the past, token airdrops are an event that put a reasonable amount of pressure on the network. And it seems like the Solana network actually withstood the onslaught of the airdrop users trying to claim their free airdrop. And it maintained 100% uptime throughout the time. So this is a good news. Kind of further bolsters the whole or rather negates the narrative that Solana is a chain that keeps dropping off or shutting down. However, let me just say this is not. There are much more anticipated tokens down the line, especially Jupiter. which I think a lot of people are keeping their eyes on peeled for. So that will be a big test for Solana as well. So, but let's just go ahead and read through this. There was a massive influx of users and transactions. Solana demonstrated exceptional performance, maintaining a remarkable up streak of 334 days throughout the year. The launch saw unprecedented activity, over 100,000 wallets active at the launch time. The surge in activity was a critical test for Solana, as the community and users were apprehensive of the sheer volume of transactions, right? So this is the tweet that the Solana guys posted on Twitter. And and not everything was great, because despite the success, the event revealed challenges in bot mitigation, meaning that there were obviously hundreds and thousands of bots logged in at the same time, automatically try to claim the airdrops. So that is a big problem for the crypto ecosystem in general, not just Solana. And on which the Jupiter co-founder actually said that, okay, we did okay, but did not do that well on bot mitigation front today. Looks like we need more aggressive. We need much more aggressive. We need to be much more aggressive and take some stronger measures, which is a good sign always, especially when you're headed into probably one of the most anticipated token launches, maybe say after EigenLayer, if they do announce it this year, for in crypto. So this is a great news, and this is something that I like about the crypto space, that the builders are genuine, and they understand where the issues are, and they actually work to kind of fix these issues. So hopefully that Jupiter team comes up with a way to kind of mitigate the whole bot issue when it comes to airdrop. So great news overall for Solana again. All right, moving on to the last news of this week. Bitcoin can be bridged to the Ethereum ecosystem now, using a new bridge protocol called Polyhedra, and it will be powered by the EigenLayer restaking info framework. Right. So as you know, EigenLayer is a restaking platform that allows projects like Polyhedra to spin up, because now they don't have to worry about creating their own list of validators, don't have to worry about token, what do you call, volatility, because there is a new token in the market. You don't know how it's going to perform. So you need a network on which you can launch a product like the BTC bridge in this case, that is stable, something like Ethereum, and that is what EigenLayer does. So they have rightfully so partnered with EigenLayer to launch their ZK bridge, a zero knowledge bridge between Bitcoin and Ethereum. And the idea is that so let's just read through this. This approach will not only allow BTC holders to generate profits, but also significantly benefit the entire BTC ecosystem. So, see, this is another thing that I really like. BTC is known as a store of value asset. There are already a lot of narratives going on the Bitcoin ecosystem front, with layer 2s and for DeFi coming up on the Bitcoin ecosystem. But then you also have something like this, where Bitcoin users or holders can generate passive income, probably through something like bridging to an EVM ecosystem, where it can then be used as collateral, or things of that sort. So this is great news. I think there was another thing that I had. Yes. So let me just go ahead and read through this summary, and that will make things clear. In essence, the collaboration between Polyhedra network and EigenLayer in dual staking uses everything is dual staking when it comes to EigenLayer, right? Using native tokens, which is Polyhedra's own token, and Bitcoins via our BTC bridge, represents an advanced step in blockchain technology. This innovation strategy not only bolsters the security and credibility of our blockchain, but opens up new doors for participation and utility in the staking, enriching the ecosystem. Obviously, okay. So So that is amazing. So if you are a Bitcoin holder, you can keep an eye on something like this to generate passive income if you feel like, right? So that is all I have for this week's news recap, and I hope you liked it, and I will see you next week with another weekly crypto news recap. Till then.